Good afternoon, everybody. It was only a few short years ago that only the wealthy and the well-connected were able to invest in exciting private companies. Equity crowdfunding has changed all of that. It's democratized and digitized angel investing. And now, practically anybody can make relatively small investments into exciting high-growth companies. And it's also empowered UK entrepreneurs to take control over the fundraising process and to raise money from a broad cross-section of society, starting with those closest to them, but also encompassing the more professional investor community. In 2011, Crowdcube launched. We were the world's first equity-based crowdfunding platform. And over the past 4 years, we've seen our industry, our sector, grow and evolve. And it's quite interesting to look back over those 4 years and see the trends that we've seen happen over those 4 years. So back in 2011, the year that we launched, we funded our first company. And they raised £75,000, and it took 5 months to raise that amount of money. Now fast forward to February of this year, and a company on Crowdcube called JustPark managed to raise £3.7 million, and it only took them 5 weeks to raise that amount of money. So you can see the real change in the speed that is possible to raise money now using equity crowdfunding. And it's not just the speed that's changed over those 4 years. It's also the size of the raises that have changed immensely as well. So back in the second year of operation of Crowdcube, back in 2012, the average raise across all of the successful businesses on the site was just £115,000. And in the 6 months to date in 2015, the average raise across Crowdcube is now well over £500,000. So again, you can see that there's been a huge change in speed and also in size of raise. And along with the change in size of raise has been the change in the size and the nature of the companies that are funding on Crowdcube. So back in 2011 and 2012, these were relatively small amounts of money that were being raised. And these were startup, seed stage companies that were raising the money. But now with these much larger raises being successful, and the average being £500,000, these are much more evolved, much more sophisticated, much more established companies that are perhaps 5, 6, 7 years old and are raising Series A stage finance. So there's been a real change in the nature of the companies that have raised money. And as well as a change in the nature of the companies that are raising money, there's also been a big change in the types of investors that are investing through the platforms too. And over the last kind of year to 18 months, what we've really seen is what I call the hybridization of investors. So crowdfunding is naturally about democratization, about getting the crowd to invest. But the crowd has now become a wider crowd than it used to be, and incorporates some new types of investor. So as well as the man on the street, you and I, be able to invest, we also have angel investors, more seasoned and experienced investors who are probably investing in these types of companies before crowdfunding came along. And alongside those, we also have funds investing too. So first of all, we have venture capital funds. The likes of Balderson Capital, Index Ventures, DN Capital have all invested through Crowdcube as part of a crowd round. And alongside those, we also have EIS funds and seed funds investing in companies on Crowdcube. And finally, we also have public and government money too. So Crowdcube was the recipient of a tranche of £5 million from the Lord Mayor's Fund, from the London Co-Investment Fund, which is being invested and managed by us into pitches on Crowdcube, into London-based tech businesses. So all of these different types of investment are all being made together, and the crowd is now much bigger and encompasses a much wider type of investor than it used to. And the real enabler for all of these trends to take place and this growth in this industry has actually been a topic that was just talked about, which is regulation. And in April of last year, the UK was one of the first countries in the world to actually get bespoke crowdfunding regulation. And incredibly, the FCA has managed to strike a fantastic balance between, on the one hand, investor protection, and on the other hand, really allowing and enabling true democratized investment, allowing anybody to invest through these platforms, which is incredibly important. And it's in no small part due to that regulation that the UK is the leader in equity crowdfunding in the world. There is no other country, there's no other jurisdiction in the world that is as advanced and is doing as much business in equity crowdfunding as the UK. We're the world leaders, and we should be proud of that. A great example of the culmination of all of these trends that we've seen over the last 4 years is that company that I mentioned a little bit earlier that raised 3.7 million. It's a company called JustPark. JustPark is a parking app, and they connect people who have spare space on their driveway or spare parking spaces outside their house with people who want to park in a particular area. These guys came to us earlier this year, and they were looking to raise basically as much money as they could. And they were successful in raising £3.7 million, which is basically the most money you can raise under the current regulations in the UK. And they raised that from nearly 3,000 investors. So a lot of investors, the most that we've ever had on a pitch on Crowdcube. And what's really interesting is to break down the nature and the types of those 3,000 people that invested. Now, when JustPark came to us, they were already a very well-established company. They've been going for 5+ years. They were doing well. They had 700,000 users on their platform registered, and they were active and engaged users of their service. And they wanted to convert them from being active users of their service to being users and owners and shareholders of their business, which is an incredibly powerful dynamic. And it creates advocates and evangelists of the service, of the brand, of the company. So they sent out an email to all of their investors when they launched their pitch, and they invested in droves and really backed the company. And it made their crowdfunding campaign get off to a really strong start. And that led on to the next stage of their campaign, which was, as you see here, they did an advertising campaign in conjunction with Crowdcube. And we did advertising all over the London Tube, all over the railway stations. You can see an example here of the kind of stuff that we were doing. And we opened up the investment to beyond their closest community, to the wider public, and gave anybody the chance to invest in this really exciting high-growth company. And again, the public came on board and had a new surge of investment into their pitch and helped them attain further investment. And alongside those two kind of groups of users, we also had VCs investing. So they already had BMW Ventures invested in them, and Index Ventures invested in them alongside those other groups of investors at the same time in the same round. And finally, the other type of investor we had was the group that I mentioned before, which was angel investors. People who had probably made these kind of investments before in the past. And we had about 50 people who put in 5-figure sums, so quite significant sums. And we had 4 people who put in 6-figure sums, so really big level of investments. And this is a trend that we're seeing in terms of angel investors are starting to put very significant amounts of money through these platforms now. They're feeling confident enough to do that. And a great kind of endorsement of that is that just 2 weeks ago, we had our biggest individual investment through our platform ever. One guy came along and put £1 million into one of the pitches on Crowdcube. We obviously decided to look into this guy a little bit further and analyze the nature of this investment. And it appears he registered on Crowdcube back in September of last year. He hadn't made any investments up until this point, and his first investment was for £1 million. And what's particularly fascinating about this investment, as we looked at it in a little bit more detail, was that he did it at midnight midnight. And what was even more interesting is he did it using his mobile. So we know a lot about these guys that are making this. And we actually even know the make of phone. He used an iPhone 6 Plus when he did it as well. So that just shows you the shift in the types of investment and the mobility that people have when they're making investments now. So I've talked a little bit about the kind of history of crowdfunding and how it's evolved. I'd like to now talk a bit more about the future for alternative finance. I'm going to flick back to this slide that I used a little bit earlier, which is about democratization. And the future I see for alternative finance is more democratization. It's going to continue. We democratized angel investment. There's lots of other different types of asset classes out there and investment types that the crowd don't get the ability to invest in. and that's going to be democratized in the future. So, for example, I mentioned VCs before, venture capital funds. The crowd can't get involved in venture capital funds. They're invested in primarily by LPs, by limited partners who are institutions. They're pension funds, they're insurance companies. These are the only ones that can get access to those kind of investments. That won't always be the case. The crowd will start to be able to invest in these types of investments. And there's no reason why, in the very near future, an LP will be a crowd. The crowd will start to crowdfund a VC. We'll see that happening. And likewise, we'll see private equity funds, we'll see hedge funds, again, open up and start to take investment in from anybody. And that's already happening. There's a platform in the US you might have seen called Artivest, who's already letting people invest into private equity funds and hedge funds. So this is the kind of trend that we will see. And the next step on from that is the democratization of the public markets, ironically, the public markets. So over the last 20 years, it's been less and less possible for retail investors, for the public, to actually be able to participate in IPOs. And there's no reason why that should be the case. Crowdfunding platforms are well positioned to be able to offer the crowd, the man on the street, the public, retail investors, the ability to be able to invest in IPOs. Our aim is to put the P back into IPO. And we envisage a future whereby our customers, the people that are using equity crowdfunding platforms, when they log in to see their portfolios, they won't just see the private companies that they can invest in now through the likes of Crowdcube. Alongside those, they'll also see public investments too. And they'll be able to manage and track their investments, their whole of their portfolio, through one platform. Okay, I've talked a little bit there about the future of financial services for investors and the opportunities that they will have to invest in the future. Now, what about the financial services use for people like myself, for entrepreneurs, for growing businesses? How will they use financial services in the future? Entrepreneurs are naturally very savvy. They're always looking for the best and the most efficient way of meeting their demands, meeting their needs. And I think it'll be natural for them to look in a different direction from the banks. They're looking at the new alternative finance service providers that are out there, and they'll gradually pick and mix the different service providers throughout their journey. So what I'm going to show you now is my idea of what a journey might look like for a company from its inception, from its startup, right through to its IPO, using those kind of providers. So as a company gets established and gets off the ground, it's going to need some seed capital, and it'll turn to crowdfunding platforms. That might be rewards-based platforms if it has a product, but equally it might be equity-based platforms like Crowdcube. And once it's raised the money, it's going to need somewhere to put it. So it'll need some kind of online banking, internet-only, online, probably mobile-first banks such as Simple and Osper, and there's others emerging too. And then as the company continues to grow and probably starts to provide some e-commerce services, it's going to need payment services. And it'll use the likes of Stripe and GoCardless, who I think we heard from earlier today. As the company continues to grow and needs more finance, it may need some debt, and it will use the likes of Funding Circle that you just heard from, peer-to-peer-based finance. And then as it gets to a bigger stage and requires some serious equity finance, perhaps it's Series A, it'll use the likes of Crowdcube or other equity-based crowdfunding platforms. As it continues to grow and probably internationalizes or deals internationally, it would use the likes of CAX and FX, so online, peer-to-peer-based FX providers. And then perhaps it would want to finance itself by using some working capital. So it could use the likes of iWalker or Market Invoice to do invoice discounting, all peer-to-peer-based again. And then as the company really starts to scale and wants to get to the next level, wants a serious amount of debt finance, it may use the likes of Crowdcube's mini bonds products, where you can raise hundreds of thousands of pounds in a debt environment. And then the culmination of all this is the exit. And as we talked about, the exit might be via IPO, via a crowdfunding platform, either all of the raise or just a part of it. So hopefully you can see that equity crowdfunding and alternative finance more generally is growing at an incredible pace. Most of these companies didn't even exist 5 years ago, but they've already managed to make it a significant imprint on the landscape of financial services. And that trend will just continue. And this ecosystem will look radically different again in another 5 years from now. Thank you very much.
Darren, we're at a particular point in time where, unless you're in China, markets have been rising.
Yes.
Interest rates are very low. I remember last time this sort of situation reversed, and it happened very quickly, and suddenly lots of the crowd got their fingers burned. Mm-hmm. How much of a risk is there that some of your investors, people who haven't invested in high-risk businesses like these before, will get burned, will realize this whole sector is too dangerous for them?
Well, look, these companies are high risk. We make no bones about it. There's all sorts of warnings and disclaimers over our website, and anybody who makes an investment through Crowdcube has to take a simple test to make sure that they understand the nature of the investment that they're making. But the beauty of crowdfunding is that you can put in small amounts of money. So you can really diversify your risk. You can build a portfolio at a low cost. And the secret to success in angel investing is always about building a diversified portfolio. So in that kind of 5 years ago and beyond, to make an investment in any kind of private company, you'd probably need to put in 25K. So to build a portfolio of 20 investments is extremely expensive. Now you can put in just 10 quid if you want to. So you can build a portfolio that's very diversified, and many of our customers have, at a very low cost.
But people are self-accrediting. They're saying, I understand the risks. But it's an up market. So how well enough educated do you think the average investor is about the risks they are really taking?
I think they're very well educated. I mean, I think most people understand startups. They understand that a lot of them fail. There's kind of stats about that all over the place. And I think people don't give the general public enough credit. And you know, I think that people do understand these kind of risks. And I kind of feel like we're a little bit in a nanny state where people are trying to make our decisions for us and not really give people the ability to make investments and back their own judgment.
Finally, if we are spending £1 million at midnight from our phone, what do we spend it on?
What did he spend it on? So he invested in a company called Sugru, which is a moldable glue. Incredible company. They've raised about 3.5 million so far. The pitch is still live. I wouldn't necessarily encourage anybody to invest. I'm not allowed to do that. Yeah, so he invested in that company, and they're doing incredibly well.
Are you sure it wasn't a bot?
I'm sure it wasn't a bot. I've spoken to him.
Thank you, Darren.
Thank you.
Thanks.